This panel will focus on the importance of cross-chain bridges and creating a truly decentralized financial system. Panelists will discuss how these technologies are shaping DeFi's future and the technologies changes involved. Let's welcome to the stage business development from Lumia, Mehmet Bay Kumar, founder and CEO of Abra, Bill Barheit, CEO of Ether Cash, Corey Kasara, general partner of BR Capital, Vladislav Martidov, and moderator, co-founder of secondlane.io, Oleg Inovaj. Let's give them a huge round of applause. Thank you.
Check, check. All right. Hi, everyone. Thanks for joining us. Thank you guys as well. It's becoming late a little bit, so we're going into some very difficult stuff for, to make sure we won't kill the audience with all the questions. But let's start probably with a quick round of introductions, just to say a couple of words about who you are, where you come from, what your project is doing for the industry.
Sure. Hello, everyone. First of all, I'm very happy to be here, and great pleasure to speak in front of you all. Unfortunately, I have a sore throat, so forgive my voice from the beginning. So my name is Mehmet. I'm a core contributor at Lumia for business development. Lumia is a layer 2 blockchain ecosystem, which focuses on real-world assets. Our mission is to be the RWA place to go for dApps to come and real-world asset owners to come tokenize their assets. Before this, I worked for BNB Chain, Binance, and TikTok, all related to sales and business development roles. And yeah, once again, happy to be here. Thank you for having me.
Thank you, Mehmet. Bill?
Hi, Bill Barheit. I'm the founder and CEO of Abra. Abra is one of the leading digital asset prime brokers and wealth management platforms on the planet. We leverage DeFi to facilitate loans, to provide yield services, probably paid out, $500 million in interest. We're one of the largest brokers of crypto-backed loans, 100% based on DeFi. Also the only US SEC registered investment advisor that's able to provide yield and loans using DeFi protocols globally.
Amazing, thank you. Corey?
I'm Koray. I'm the head of Ether Cash, and we are building the TradFi rails for the EtherFi ecosystem. Currently, we are deploying credit card, which I'm sure a lot of you have heard of. It's going to be a non-custodial crypto credit card, and we use Scroll as the accounting layer, basically. So we do a lot of cross-chain bridging and automated payments for customers, and all in a non-custodial way.
Thank you. Vlad?
Hi, my name is Vlad. I'm a co-founder and general partner of an investment fund called BR Capital. We primarily focus on the Web3 projects, and actually we're one of the earlier investments we did was in DeFi almost 8 years ago, which actually play very good for us. We made more than 10 multiples. Was very early investors in OneInch, MetaMask, and a few other projects. So, and we keep doing this. Yeah, happy to be here, guys. Thanks.
Awesome, thank you. So let's start with probably with some contradictory question here. In the current cycle, it does look like DeFi lost its, sort of sexy touch in a way, which it was, a big deal over the last bull market, right? And if we look at the, the situation right now, we have some polarizing trends. So on the one hand, we have all the institutional guys coming into in the form of ETF, buying out Ethereum and Bitcoin from the industry. So in essence, there is no underlying innovation or technology or DeFi as such, right? Like it's not needed there for it. On the other hand, you have all the retail degens playing around with meme coins, with Telegram mini apps and all that, and it doesn't look like you don't need the technology there either in a way. And then to the last point, VCs are not very active in the space over the last couple of years, right? Because it's not very obvious in terms of where to put your money to, although you understand the bottlenecks of DeFi, but you don't know if your investment would actually bring you returns to your LPs. So why bother? You know, is this DeFi needed at all?
So it's very easy for me. I mean, the path forward is really clear. So I think two things are about to change in a big way that represent probably the biggest sea change we've ever seen in banking. The first is, we're about to unleash billions, not millions, billions with a B, if not trillions, of autonomous AI agents on each other. And most of these autonomous agents at scale are going to be communicating with each other, not with people. And if you require an autonomous agent that needs to get paid or transact to use a stored value account or a bank account, by definition, it's no longer autonomous. So I do believe that what we're about to see is massive adoption of smart contract technology by the AI industry. If not vice versa, basically they're going to merge. It's got to happen. There's really no other way to do it. And so that's part one. And part two is, I think that now that the layer one scaling problem via the kind of next gen chains is, I wouldn't say completely solved, but certainly on a path to being potentially solved. I think you're going to see dozens of next generation neobanks built natively using DeFi rails on Solana, Sui, Aptos, et cetera, et cetera. That's what I would be doing if I was starting a neobank today. And that means you have access to DeFi for yield, for loans, for derivatives, potentially for synthetic assets, in a way where, especially if it's non-custodial, there's simply no off switch, and you can't regulate it out of existence, which in today's environment is extremely interesting. So those two things represent a dramatic change to everything we think of when we think of banking, and it can't be done without DeFi, in my opinion.
And actually, I completely agree with you. And in addition, I'd like just to add that this is the future. But if you look even on the current customer base or user base, I mean, number of transactions, the overall usage level, it's actually growing. And there are a number of reasons for that. So first, with all restrictions, sanctions, and everything what's happening right now in the financial sector, people are really looking for DeFi as the way to be able freely to exchange coins, to store value, and do other things. Also, I mean, DeFi is a kind of probably the second largest after trading, the way you can earn money with liquidity and farming and all of these things. So I think, and it's growing, and it's growing. Probably it's growing relatively steady. Probably you don't see much hype in the media about that, but underneath there is really positive developments going on.
I think I totally agree, by the way. Freedom of transaction is the reason crypto was created. And DeFi is really that. It gives you the freedom to transact no matter who you are or where you are. And it solves exactly this problem. I think the reason why it seems like DeFi lost its edge this cycle around, just to get into your original question, it's just because all the DAO tokens underperform. But the reason for this is completely outside of the DeFi space. This is just to do with some VC games and investment games, but it has nothing to do with DeFi itself. If you look at the volumes, at the number of users, and at literally any metric, DeFi has grown like year by year, every single year. Not even considering bull or bear cycles. So generally, I would say it solves exactly the problem it is supposed to solve. And I just don't see a reason why we have to invent new use cases for DeFi. There is already the use case, which is the freedom to transact, and the whole idea why all of those conferences exist is exactly that. So many people get wrecked with centralized exchanges and the solutions on top of crypto, which are in some way or another centralized again. But again, like DeFi solves all of this, and people who understand it, and I guess more and more people seem to understand by every year, they don't get wrecked. Like people who used FTX are probably not here today. People who didn't, they are here.
Sure.
I'd also love to add my opinion. So every asset, almost every asset, like even the most stable ones, like for example real estate, has its own cycles. Time to time it goes down in a very like unbelievable way. I remember like in 2021, a lot of friends that bought houses were complaining that it was down. Now it's a different case, as we all know. So even like if DeFi is not the shining star of this cycle, it doesn't mean that it won't be next or the one afters, or it doesn't mean that it's not valuable anymore, or it doesn't add value anymore to people's lives. It still does. From what you mentioned, the institutional investments, the memes, and the Telegram mini apps, I think all of those add like value to the ecosystem in different ways, especially the institutions. Before the ETFs were here, if I'm not mistaken, Bitcoin is the fastest growing ETF in history. Correct me if I'm wrong, please. So like that was something that I think like specifically for like years and years people have been waiting. It was gonna increase adoption in a significant way, which we see today that it has. So all of those things, of course, add value. DeFi might not be the shining star of this cycle. There are a lot of things that did not shine this cycle, but this doesn't mean that it's not going to shine in the near future.
Awesome, thank you. So let me ask you this then. So apparently, whenever we're talking about some drive in our market, usually it's somehow tied up to the retail market, right? To the number of users. So that means that people would need to find some value for themselves, and then of course it has to be very clear as a message, very simple. Now, if we look into DeFi right now, it does look like the simple models to communicate to the users are no longer there, right? So meaning like your traditional lending versus collateral or swaps and dexes where you can make money is not enough anymore, because you would need to build more complex financial instruments on top of it, like market neutral strategies and whatnot, to bring some additional yield, to make sure that you do compete on the yield levels with the users. But that, on the other hand, brings all the difficulty to communicate it to your traditional retail user, right? They don't understand that already. So that's something on the one hand. And then on the other, you have all the regulators, and then you have the ETF guys that are literally just using the same traditional rails, disregarding whatever's happening under the hood, just buying those tokens that would make sense to sell to the same clients under the same legal infrastructures and whatnot. And then you have the regulators who are going after the pure DeFi protocols to try to somehow like package them or box them into some regulatory environment. So it does look like there's so many obstacles within the DeFi ecosystem to actually find another boost for it, right? On the product level, on the explanation level, regulation and whatnot. Do you see it the same way, or it's?
No, I don't. I mean, I think, in addition to the use cases I mentioned before, which I think are, happening now, they're not a pipe dream. I think what's really happening right now, as the Bitcoin price is exploding up, and going to continue to melt up, in my opinion, the number of people who are going to want to borrow against Bitcoin is going to just continue to explode, in my opinion. And probably DeFi's weak point right now is that it doesn't handle Bitcoin very well, but it does handle Bitcoin, right? I mean, you have wrapped Bitcoin on all the main chains now. So as Bitcoin price continues to go up and melt up, and it hasn't even started yet this cycle, in my opinion, the number of people who are going to want to borrow against that Bitcoin in order to not have to sell, capture future value, access gains now, is just going to grow astronomically, in my opinion. We're seeing it at Abra. I mean, it's our fastest growing business is brokering loans using DeFi for high net worth investors.
Thank you. Anyone else? To your point, Bill, you very correctly said that Bitcoin is obviously one of the largest markets in DeFi, apparently. I mean, because it is the largest in centralized exchanges and whatnot, right? But even the wrapped version of Bitcoin is not decentralized, right? So at the end of the day, like whenever you go down this chain of connections and connections and connections, you end up with a legal entity that would be responsible for holding a certain storage of that asset to make sure that it produces a derivative on what we then would call DeFi.
Just like a stablecoin.
Sure.
Just like USDC and Tether and the vast majority of the assets that we use DeFi for. So that is the weak link in the chain. Pardon the pun. Is that once you've got an asset with value in the physical world, and I'm going to put Bitcoin in that because it's not an EVM or Solana native asset, you're trusting someone. And that's unfortunate, but there's no way around it today. I think we will get to the point where everything is native or optionally native in certain circumstances. Like you will see synthetic dollars and synthetic versions of other assets that don't require custody of dollars or custody of Bitcoin, whatever. We're not there today. So that's what we have.
Yeah, makes sense. So if we go down into the current bottlenecks in the industry, what do you see as the largest bottlenecks for the industry to grow faster? Is it regulation, cross-chain bridges, fragmentation, oracles? On the technical level, regulation, user cases. What do you see as the largest ones? Maybe, yeah.
Well, I see the three things at least. One is conversion fiat to crypto and crypto back to fiat. This is from mass adoption of DeFi and decentralized finance, probably the biggest roadblock. There are a couple others like UI for basically people who used to kind of get used to like very good online mobile banking with couple clicks to get transactions. Quite often a big challenge to do like swaps of different coins between different chains and these type of things. And it's still quite complicated from technical point of view for broader audience. And another thing is security. Basically, there is a security concern is quite a big one. Maybe not at the biggest DeFi exchanges like Uniswap or some respected ones, but for number of protocols other than the big ones. So I think there are three things, but again, I think crypto fiat back to crypto is the biggest challenge. How to do it that you can do it like keep all benefits of kind of blockchain or crypto society where your privacy, your anonymous kind of still there, but you still like convert it to fiat where banks right now require tons of things to be disclosed, not just residence address, not just utility bill. They make more and more demands to basically to kind of understand you as a customer. So how these things will work out, I have open question mark. This is the biggest challenge from my perspective.
Mehmet?
From my part, like I also like can easily think of 2-3 things. Number one thing I think of is education. I think that like in the traditional education system, there are a lot of things that are not, being implemented right. And we're learning a lot, people are learning a lot of things that they won't, need to use in real life or benefit from it. But something like this, for example, if someone wants to send money abroad on a weekend for a very affordable, price, transaction fee, then this is something that they can use. So I think like the education part, I think like still most people for the first time buying crypto is like hearing it from their friends showing them how to do it, etc. That was my case back in the day a long time ago. And then the second one, which is also, I think, connected to this one, is the complexity of using a wallet, buying crypto for the first time, doing KYC, wherever you're entering, DeFi or like crypto world from, it's just like not a very easy first step still. So I think that we are going to tackle this over time. It's going to be easier and easier day by day. But as of now, I think this is still a serious issue.
So it's not that complicated, right? I mean, everything Mehmet and Vlad said, it's all useful stuff to add, in my opinion. But right now, for the next 3 to 5 years, the only thing that really matters in terms of adoption is the Bitcoin price, right? Because let's just break it down. It's really simple, okay? Ethereum ICOs, Ethereum NFTs, Solana meme coins, all basically accelerated by the fact that the underlying value in the L1 was going up, right? There was a lot of extra money in Ethereum, NFTs benefited. A lot of extra money in Solana, meme coins benefited. Basically, Bitcoin is the tide that raises all boats right now. And if its value continues to go up, that will drag the layer ones with it, which will then have, of course, a very positive effect on the amount of, certainly on a dollar basis, the amount of value that's available to these DeFi protocols to do interesting things, because that's where the quote-unquote money is still coming from. And that's what's going to happen for the next 3 to 5 years. I think until other non-stablecoin real-world assets become meaningful within the crypto ecosystem, what I just said is not going to change. And I certainly don't see that changing this cycle, maybe after that, but that's the reality of where we are, and that's fine. I mean, that's just, yeah.
Totally. Thank you. Corey?
So I completely disagree. I think the UX of DeFi is the #1 problem. The #1 problem that doesn't drive retail adoption, which in turn would probably increase the price of L1 assets because of retail adoption. The UX is such a nightmare that I would say 12-year crypto user, have a difficulty using crypto apps today. And this is a problem, because how can I explain anyone how to use crypto if I can't use it myself properly?
So can I just push back on that a little bit?
Of course.
I've been doing this for 35 years. So when I was working on the pre-commercial internet, we would basically access the internet by doing telnet and RPC programming, which nobody in this room understands what I just said. Maybe you do, but I don't think anybody else does. And any app that you would build would be completely unusable by anybody except a PhD in computer science. And the protocols for DeFi are fine, right? I was at Solana Breakpoint a few weeks ago in Singapore, and I saw demo after demo after demo of absolutely beautiful killer interfaces being built on all the protocols, right, that the PhDs understand, but the consumers don't. But my original point of those apps, the adoption of those apps is going to be directly proportional to the price of crypto, whether those developers like it or not, maybe with the exception of neobanking in places like Brazil and emerging markets where they could take advantage of it. But
neobanking is important. Neobanking is like crypto.
But all I'm saying is those user interfaces are here now. I saw them. And they're still not going to get adopted, with a few exceptions, unless the price is going up. That's all I'm saying.
But are those accessible to everyone, in your opinion, right now?
That's a marketing problem. I mean, how does somebody distribute an app or a web page?
Is it not?
I don't know.
And the legal question. It's a good vibe we're having here. Unfortunately, we have just a few minutes left. Can I just throw one question that at least bothers me as an investor in the place, right? So, when you look at DeFi as a very interesting space with so much potential, apparently, right? Becoming the new neobanks, whatnot, becoming the center of the financial system. And you do understand all the bottlenecks, right? On the technical level, so the bridges, oracles, abstracting out the whole user interfaces and whatnot. On the legal levels as well, right? Where you would just work on the interfaces and the legal structures to actually interact with the clients in this and that region. You end up with projects that have a lot of responsibility because they're holding or transacting tens of billions of users, but their earnings from fees are tiny, their valuations are minimum compared to your L1s, L2s, to your meme coins or whatnot. So from the investor perspective, it doesn't look like it's a good deal because there's so many approaches, so many projects that are trying to crack it, and so many questions whether they will make it or not. And in the end of the, at the end of the game would be that even if they do succeed, you still would not have such return on your capital, compared to your investments in yet another L1, L2, and whatnot. Would you agree with that?
Look, I'm going to say, I don't know if this is a very popular thing to say, but I'm going to tell you what I really believe. I think Vitalik understands now that the scaling roadmap as it was originally introduced for Ethereum was wrong. Okay, I think proof of stake was handled fine. It works, well done. It's like basically changing the engines on an airplane mid-flight. Very impressive. But the scaling roadmap that has enabled 6 million layer 2s, it's just broken. And when I see the emergent L1s get the developer mind share, I ask myself, why is this happening? And the answer is obvious. Zero cost, right? And highly scalable. It's not that complicated. They're willing to sacrifice short-term decentralization on the assumption that the decentralization is going to catch up. And Solana seems to be proving that out, and I think Sui is very promising. So I do think that the powers that be on Ethereum get this now, and I don't know what they're going to do, but the good news is we have lots of competition that's addressing this, in my opinion. I'm sure people who are knee-deep in layer 2s hate what I'm saying, and I understand why, but that doesn't mean it's wrong.
Anyone else?
I think also I mentioned cycles before. What is interesting now can definitely change the next cycle. We've seen that happen before. So we are highly investing in, believing in real world assets. So in our opinion, in our what we're investing in, betting in, giving our heart and soul in, is that the projects that focus on real world assets will be the biggest winners in the next decade. So depending on how the adoption, where the adoption comes from, where the use cases come from, it might change. So what's happening now, I don't think everything's going to stay stable and same for the next 2 decades. Definitely a lot of things are going to change.
Thank you, Mehmet. Vlad?
Actually, you asked quite a tough question.
Trying.
So, yeah. Well, look, there are a few comments, actually. I kind of agree with my friends at the panel discussion who just make a comments, but there are a few thoughts. First, it's not exactly the way you just described, Oleg, that every single DeFi project has tiny margins and not sustainable business model. There are some which, by the way, the cost is really low. So even if the margin is low, it's okay because you can still make money. The question is you can make money when you have a big scale, when you have a larger number of users and number of transactions. And here there is another bottleneck, is liquidity. Most of the new startups in DeFi, they challenge how to get the liquidity, enough tokens to swap, right, and make transactions. So we know the successful cases, and I'm optimist. So I think with a new marketing tools where you can, within a month, get a few million, crypto marketing tools like tapping, etc., you can get 1 million audience, and maybe with the unique user cases, because the problem is also most of the DeFi projects, they copy the big guys. There is lack of innovation. If somebody will crack, for example, will find the solution how to do fiat-cripto exchange, for example, right, smooth and easy, and within a certain legal framework, even if there's some third developing country, where the legislation is allowed to do so, then there is a compelling user case for me, start using this platform. So, and I think combination of different factors might help to see more DeFi projects successful. So that's one part. Another part, I think I would refer back to the first comment from you. You mentioned about AI agents. And just I think, and it's really so fast how we see AI agents all over. We might see in a year or two, like completely new landscape of DeFi services, and that might make a big game changer. So from this perspective, I'm kind of optimistic about DeFi market. So I think even minor margins, tiny margin is not a big challenge. The challenge, liquidity, new technology, kind of, and basically adoption of mass users. And I agree, user interface complexity is very difficult. Like, I mean, just for me, it's still a kind of things needs to be solved. Yeah.
Thank you, Vlad. Corey, any comments?
So we didn't cover bridges or L2s a lot in this discussion, even though this was the topic. But generally, there's an idea why L2s and why bridges exist. The number one reason is the liquidity is on Ethereum. So people want to use Ethereum. And in turn, the fees are high, so something is needed to make it scalable. ETHFI Cash is one very prominent example. We have to use Ethereum because of what we are and what we are doing. And because the fees are too high, we have to use an L2 for the accounting layer. So in terms of what are the DeFi protocols using and why are they building stuff, I don't think it's always the investment perspective. Sometimes it's actually the use case that makes things necessary. So most of the L2s, I don't think there will be a lot of L2s in 10 years. I think a couple ones will win. I think there will be other parts to scale Ethereum and other L1s, but mainly the use cases on why the L2s are needed are the ones that will drive innovation in the future.
Thank you so much, gentlemen. I think, unfortunately, we ran out of time. I think it was fun. So let's give it a round of applause for our esteemed guests. Thank you.